So guys, how are you all doing? I hope you all are doing great. So guys, best off on today's topic, we're going to be talking about top-down analysis. It's just like more or less like top-down analysis, just as the name implies, top-down analysis. Once you understand what market structure are on this market, now another problem most of these traders face is just like based off on top-down analysis. I don't know if I'm making sense, but today I'll be like it's just like based off on I will just simplify top-down analysis for you guys so that you guys should just understand what top-down analysis are. I don't know if I'm making sense. So now let's start without wasting any further time. So first of all, when it comes to the financial market, I told you guys that please, if you know that you haven't yet understood market structure, please, I want you to go back to my previous videos and make sure you understand what market structure are. They are actually very, very important. Guys, I don't know if it's making sense. Market structure are very, very important. Once you know that you have understood market structure on this market, now the very next thing, like let's say, it's just like more or less like market structure and top-down analysis that are actually the same thing. I don't know if I'm making sense. Now, let's start. First of all, ask yourself what's our top-down analysis? Top-down analysis, just as the name implies, top-down analysis, top-down analysis. Guys, just as the name implies, what are top-down analysis? Top-down analysis is just like more or less like using multiple time frames to analyze on the financial market. So, for example, now let's say I keep telling you guys that when it comes to you, like let's say for example now, top-down analysis as a day trader you are, your main focus as a day trader is based off on the 4 hour time frame, the 1 hour time frame, your 15 minutes time frame, or your 5 minutes time frame. Now I'm going to explain all this thing for you guys today. 4 hour time frame, what is it for? The 4 hour time frame is just based off on your top-down analysis. 4 hour time frame is just like more or less like directional time frame. Directional time frame. 1 hour is just like more or less like your zones. We can also call it POI or AOI. That's areas of interest and point of interest. They're actually the same thing. Or you can also call it levels. 15 minutes time frame. So guys, let's proceed. First of all, top-down analysis is based off on as a trader you are, you cannot just come into this market and say that you want to just use one time frame like that. I don't know if I'm making sense. No, it's not done like that. I don't know if I'm making sense. As a trader you are, it's a must. I don't know if I'm making sense. Top-down analysis must be involved because without that top-down analysis, you can never, never, never understand the market and you keep losing your money. I don't know if I'm making sense. So now, the 4 hour time frame is just like more or less like I don't know for you guys, but for me, I'm a day trader. I don't know if I'm making sense. As a day trader for you, as a day trader you are, the 4 hour time frame is just like based off on your directional time frame. What is this directional time frame? The main trend of the market. The 4 hour time frame is just like the buzz of this market, trend of the market, 4 hour time frame. I don't know if I'm making sense. Just like the 4 hour, just like the main buzz. Like anytime you just come into this chart, or let's say you want to trade or something like that, don't just look at this on this 1 hour, 15 minutes. Like I call them noise. I don't know if I'm making sense. I call them noise. the very first thing you will do as a trader is just come into your 4 hour time frame. I don't know if I'm making sense. I think this is just like the most simplest thing to do as a trader you are. All these 15 minutes time frame and 1 hour time frame, they're just like noise. I don't know if I'm making sense. Now, the 4 hour is just like the boss of this market because it's just like from this 4 hour, you will know the main trend of this market. This 4 hour will tell you if you are buying today or if you are selling today, or if you're going to stay out from the market today. I don't know if I'm making sense. Good. Now, as for the 1 hour time frame, the 1 hour time frame is just like based off on your zones. I don't know if I'm making sense. So it's just like, don't worry, I will still explain all these things for you guys on the charts. Just like more or less like when you are done finding your like getting the main trend of this market on the 4 hour time frame. Now you scale down to the 1 hour time frame. What are you doing on this 1 hour time frame? Your zones. These are where your levels, point of interest or areas of interest comes in. Whether you are using something like the Fibonacci retracement tool, now this is where all these tools comes in. I don't know if I'm making sense. Good. Now, when it comes to your 15 or 5 minutes time frame, what are you doing on this time frame? These are where your entries comes in. I don't know if I'm making sense. Now, let me show you guys something really quick on the chart. So now, if you observe now on this trade we took on on this AGJ power. Now, please, I want you to pay good attention to me. I don't know if I'm making sense. I want you to pay good attention to me. Pay good attention to me. You know, I told you guys that when it comes to trade, the market structure is key. Market structure is key. Structure is key. The most important thing is structure. Any day you come into this market, the very first thing you watch out for on this market is structure. Guys, I don't know if I'm making sense. Now, if you observe now, guys, we have this most recent structure on this market. You know, I told you guys that on the 4 hour time frame, on the 1 hour time frame, it's just like your zones. Your 4 hour time frame is just like the main trend of the market and 15 minutes for your entry. Now, as a day trader you are, your only focus is just like you're only focused on the like most recent structure. Like it's just like based off on what has happened on the past 24 hours. I don't want you to go and be looking at all this shit that has happened and something like let's say last week or last 2 weeks. No. Not if it making sense. You are a day trader. The only interest or let's say your concern is just like based off on what has happened within the last 24 hours. I don't know if I'm making sense. Good. So now, guys, if you observe now, we have this high, we have this highs up here. We have this first high. One sec. We have this first high, this first high. We have this first high. We have this shit. We have this first high. We have the second one. We have this second one. Now we have this third one. Now, as a professional trader you are, you don't even need something like let's say something like an eyeglass or something like that for you to know that this is just like a ranging market. I don't know if I'm making sense. Good. Now, I want you guys to pay good attention to me. We are still on the 1 hour time frame before we head over to the 4 hour time frame, but I don't want you to analyze like this. If you want to analyze, first of all, head over to the 4 hour time frame. But me, based off on my level I am on this market today, from the 1 hour, I already know what is already happening on the 4 hour time frame. I don't need to head over to the 4 hour time frame again. I don't know if I'm making sense. Now, so guys, if you observe now, market pushed up, created this bad guy to the upside, created this high, pushed down, created this higher low. Market pushed up a little bit, created this small high. We cannot call this a higher high. Why? Because the body of a candlestick has not yet closed above this previous bad guy. I don't know if I'm making sense. The market pushed down, created this higher low. Now, the market pushed up again. I don't know if I'm making sense. Market afraid to break this range to the upside. The market pushed down a little bit, but market broke this high to the upside. This is a break of structure. I don't know if I'm making sense. The market pushed down. Now the market pushed up again, broke this entire range to the upside. I don't know if I'm making sense. Now, this is where your concern as a trader is. You hand over to the 4 hour time frame. What are you doing on this 4 hour time frame? The main trend of the market. I don't know if I'm making sense. Now, let's say, let me pick up my backtesting tool. My replay tool, sorry. So now, guys, let me show you guys something real quick. You know, I told you guys that your only concern is based off on the 4 hour time frame, the main trend of the market, your 1 hour, your zones, and your 15 minutes, just like based off on your entries or your 5 minutes, your entries. I don't know if it's making sense. Now, let me show you guys something real quick. So now, guys, if you observe, I want you guys to pay good attention to me. If you observe now, market push stop on this 4 hour time frame. Shit, this is market push stop on this 4 hour time frame. Market push stop on this 4 hour time frame. Created this high to the upside. Now let me show you guys something real quick. Market push stop on this 4 hour time frame. Created this high to the upside. You know, it's more or less like I told you guys that anytime you see all this shit. No, I one sec. So now I want to show you guys something real quick. You know, I keep telling you guys that structure is very, very important. So now, if you observe now this 4 hour time frame, the market pulls down. Pay good attention to me, guys. I don't have much voice to shout. I don't know if I'm making sense. So guys, if you pay good attention to this structure, market pulls down, created this low, pushed up, created this lower high. The market pulls down again, created this lower low. Why is it the lower low? The body of a candle has. So guys, as I was saying, the market pushed up, broke this high to the upside, this previous high to the upside. Now, you know, I told you guys that it's more or less like anytime you see all this one candlesticks here, just like more or less like a one movement. I don't know if I'm making sense. Now, the market pushed down, created this higher low. I don't know if I'm making sense. Now, the market is impulsing to the upside. Good. Now, as you can see, as a trader, you are like the forward time frame, just like it's just like in a bullish trend. I don't know if I'm making sense because you call it an uptrend. So now you scale down to the 1 hour time frame. What are you doing on this 1 hour time frame? Your zones. I don't know if I'm making sense. These are where your zones comes in, something like your Fibonacci tool. I don't know if I'm making sense. Now you know I told you guys that as a trader you are the only interest, like just like based off on your own interest as a trader, is just like something that has happened on the past 24 hours. I don't know if I'm making sense. I don't want to go and be looking at all this thing that has happened something like maybe 2 weeks or 4 weeks ago. Guys, I don't know if it's making sense. Good. So now on this 1 hour time frame, we have this high. Market push stop. Please pay good attention to me. Pay good attention to me. I don't know if I'm making sense. Market push stop created this high, created this higher low. The market pushed up again, failed to break this bad guy to the upside. You can never call that a break of structure. I don't know if I'm making sense. The market pushed down a little bit, now broke this high to the upside. I don't know if I'm making sense. You know, I told you guys that it's more or less like anytime you see all these little candlesticks, just like a one movement. I don't know if I'm making sense. Now the market pushed down again. Please, I want you guys to pay good attention to me. I need to remove all this shit. Now, you know, I told you guys that when it comes to using your Fibonacci tool, the only thing, just like based off of, we have this high, we have this higher low. Now we have another higher high. I don't know if I'm making sense. When next you see this next candlestick retracing to the downside, as a smart trader you are, you pick up a Fibonacci, you start from this lower streak, extend to this higher streak. I don't know if I'm making sense. Now, as a trader you are, you're just like more or less like you're expecting market to come and do something like this, then buy. That's if you're entering your trade aggressively. I don't know if I'm making sense, but if you want to enter your trade conservatively, you can also use rejection or something like that. I don't know if I'm making sense. And you can also use candlesticks rejection. Please make sure that you use the candlesticks rejection I taught you guys. I don't know if I'm making sense. Good. Now, let me show you guys something real quick. This structure we have here, remember that on the 4 hour time frame, we are already bullish. So you don't need any extra confirmation or confluence. I don't know if I'm making sense. Now we have this high. Market push up created this high, push down created this high low. Now market push up again. I don't know if I'm making sense. Now you know I told you guys that one thing with structure is that structure can never be picture perfect. I don't know if I'm making sense, but from my own personal experience and from my own perspective and all these years I've been on this market, I'll tell you guys that this is a very good trade. I don't know if I'm making sense, but this is just like other ways of you using your Fibonacci. I don't know if I'm making sense. This one right here is just like the basic way of using your Fibonacci. I don't know if I'm making sense. Why this one right here is just like more or less like one of the other ways of using your Fibonacci tools. Don't worry, I'll still teach you guys all those ones. I don't know if I'm making sense. So now, if you observe now, the market goes down. This market goes down. I don't know if you're making sense. This market pulls down. The moment this market pulls down, as a smart trader you are, you pick up your Fibonacci too. You start from this lowest week. And please make sure that you always zoom in your chart. I don't know if I'm making sense. Please make sure that you always zoom in your chart when plotting your Fibonacci too. I don't know if I'm making sense. Now you start from this lowest week, you extend to this highest week. Now I want to show you guys something. Let me show you guys something real quick. So now, as a smart trader, I remember that your zone is down here, this 0.618. Now, I'll show you guys something. This trade right here, the reason why this trade reversed, the reason why this trade right here reversed is based off from news event. There was a high impact news event. And I keep telling you guys, please make sure you stay away from news. I don't know if I'm making sense. Make sure you stay away from news events. Please make sure you always stay away from news events. I don't know if I'm making sense. That's the reason. It's just like based off on this is just like the reason why this particular trade reversed before it started pushing to our direction. I don't know if I'm making sense. Now, let me show you guys something real quick. Now, as a smart trader you are now, you can see that this candlestick has started retracing to the downside, right? Good. Now, you pick up a Fibonacci, you draw from this lowest week, you extend to this highest week. Now, let's play this. Now, as you can see, shit, this is too fast. Now, let me show you guys something real quick. Now, let me show you guys something real quick. This trade right here actually rejected to the upside. But I will tell you that the reason why this trade reversed is based off on high impact swings event. Guys, I don't know if I'm making sense. Now, let me show you guys something. Let's say we enter this trade somewhere around here. Now, I keep telling you guys that the stop loss just a few pips below this guy down here. Please make sure that you always give it a breathing space. I don't know if you're making sense. Make sure you always give it a breathing space because sometimes market might decide to come and do something like this. Do something like this before I start pushing to your direction. Guys, I don't know if I'm making sense. So please make sure you always give it a breathing space. I don't know if I'm making sense. Now, let's play how this market behaved right here. But I will tell you guys that the reason why this trade right here took us out is because it was just like based off on high impact news event. I don't know if I'm making sense. Now, let me show you guys something real quick. Now, this guy took us out. Can you see it? This guy took us out immediately, started pushing to our direction. Why? Because of high impact news event. I don't know if I'm making sense, but on a normal, like just like based off on, like on a normal period or something like that, the market just touch off Fibonacci, then you pick your trade to the upside. That's based off on rejection. But if you still want to enter your trade based off on conservative entries, that's candlesticks and market structure shifts, you can also use that. I don't know if I'm making sense. So guys, these are not hard. I just want you guys to practice and practice and practice. I don't know if I'm making sense. Now let's play this chart. So guys, as you can see, this trade right here actually took us out. The moment this trade took us out, the market started pushing to our direction. Guys, I don't know if I'm making sense. So please, I will always tell you guys, make sure that you avoid news events at all costs. I don't know if it's making sense, most especially high impact news event from all this, like something like CPI, FOMC, all these big news event place. I don't know if it's making sense. Trust me, news event will enjoy you if you trade news events. I don't know if it's making sense. So guys, please, I keep telling you guys and make sure that you keep things simple. I don't know if it's making sense. Always keep things simple. Don't complicate trading. I don't know if it's making sense. Let's say you are using something like the 15 minutes time frame for your something like your 15 minutes time frame for your entry. That's 15 minutes for your bullish pin, but then 5 minutes for your shift in market structure. I don't know if it's making sense. Now let me show you guys something real quick. This trade right here actually gave us a swift and nice bullish pin bar. But as I just said earlier, The reason why this bad guy, this trade right here took us out is because of high impact news event. So as you can see, the market took us out, then started pushing to our direction. That's why I keep telling you guys, don't trade news event. Don't know if I'm making sense. News events don't respect structure. News events don't respect bullish, all these bullish pin bar, doji, and all these shifts in market structure. I don't know if I'm making sense because once news, all these high impact news event comes up, the market will not even care. I don't know if it makes sense. So please make sure that you stay out from news events based off of my own personal experience on this market. I don't know if I'm making sense. So guys, it's actually very, very simple. Now, let's say you are using something like the 5 minutes time frame for your shift in market structure. Now, you scale that to the 5 minutes time frame. What are you looking for in this 5 minutes time frame? Just like you're looking for a shift in market structure. I don't know if I'm making sense. Now, let me show you guys something real quick. The market pushed down. The market pushed and created this low, lower high, lower low, lower high, lower low. Now let me show you guys something real quick. The market pushed up, but market failed to break above this previous lower high. As you can see, it's just like the wicks closed above that level. The body of a candle must successfully close above that level before you call it a shift in market structure. I don't know if it's making sense. I keep telling you guys that that wick right there is just like a manipulation. I don't know if I'm making sense. Now the market failed to break that bad guy to the upside, pushed down again, created another lower low, pushed up again, created another lower high until this trade right here took us out. Why? This particular trade right here, the reason why this trade right here took us out is because of news event, high impact news event. I don't know if I'm making sense. So guys, on a normal, this trade will just like smash this TP. I don't know if I'm making sense. Like just like on a normal, this trade right here will just smash this TP right here. And I want you guys to always take out your profit, take out your profit on this zero because there's always a double top there. The market always reverses from that level. Let me show you guys something real quick. Now let me show you guys something real quick. As you can see now, let's say for example now this shade now pushed up. Let's say for example now this shade now pushed up. This shade now pushed up. There's always a first leg double top there. So there's also this resistance level up there. I don't know if you're making sense. So there's always this 99% chance that once market touches that level, the market will start reversing. So we as a smart traders, we want to take out our profit before that shit even happens. Guys, I don't know if I'm making sense. So please, if you come across this YouTube channel, I want you to please subscribe, like, and share. And guys, cheers, all guys.